This. Very good, welcome. Okay, here is our December seminar. And we will explore the magic of life insurance. Here we go. Today's topic will focus on the difference between the Disability Premium Waiver Rider on life insurance and a standalone disability income protection policy. Darren, our maven on all things insurance, is here. And Darren has proven over the last 15 years to be quite savvy on these products, and he communicates these sometimes complicated features very well. So it's always a privilege to have a dialogue with you, Darren.
Thank you.
You are welcome. So let us now explore a little bit the difference between the two products. So again, we have a rider on life insurance versus a standalone disability policy. Can you start out by telling us, in general terms, what are the big differences between those two types of coverage?
Yeah, sure. And good afternoon and happy holidays to everybody. It's getting to be that time of year. So yeah, to differentiate between the two, the first topic we're talking about a disability rider or a disability waiver or premium rider on a life insurance policy. And just think of it like this. So I've purchased a life insurance policy, any type of life insurance policy. It can be a term policy, a cash accumulation type policy, a guaranteed death benefit, policy, doesn't really matter. The various companies will give you an option to include a rider, usually for a small upcharge, that allows you the comfort of knowing if something happens and you're no longer able to work, the company will pay the premium for you to continue the policy. So for instance, I'm a financial advisor. I get in a serious car accident. I can't sit at my desk or be on the phone or do the things or meet with clients and do the things that I do. I submit a claim to, let's say, Prudential. Prudential approves my claim and says, okay, we'll pay your premium until what point in time you're able to work. I mean, hopefully I recover and I'm able to come back. Heaven forbid if I'm not. And again, every company is a little bit different, but typically a company will waive a premium up through age 65, which is the traditional age, that somebody, not in today's world, I know people work much longer. I know I will. But age 65 typically is when they would, stop paying the disability waiver.
Okay. And again, that's a disability waiver on life insurance.
Mm-hmm.
So we're talking about basically somebody not having to worry about paying their life insurance premium during the time they're disabled and not able to work.
Yep.
So how does that differ from my standalone disability insurance protection policy?
Yeah, what we call an individual disability income policy or a long-term disability policy that's where you're really protecting, your paycheck, your income. Same scenario. I'm a financial advisor, either due to illness, sickness, accident. There's something that prevents me from doing my job. Usually after a short, what they call waiting period or elimination period, I file a claim with the company and they approve the claim, hopefully. And then I'll start receiving a monthly benefit, which is a factor of my income to help me, keep things going as long as I have that disability. And, God forbid if I'm disabled permanently, let's say, as long as my working years would have normally been age 65, age 67, some policies will go to 70. I can rely and be comforted knowing I've got a paycheck. So that's an actual cash benefit that I'm receiving versus the life insurance waiver, which is equally nice if something terrible happens. That's just the company paying for my insurance, whereas this is the company's actually sending me a monthly benefit so I can pay my bills, what have you.
Okay, I get that. Um, just to throw something out there, when people do a budget and they target and they identify the expenses that they would have to pay if they were too hurt or sick to earn a living, obviously their life insurance premium would be one of those expenses.
Mhm.
Um, so why wouldn't somebody just say, okay, I want to get enough benefit from my disability income protection policy to also pay for my life insurance premium? Why would they want to have the insurance premium, life insurance premium covered by that rider as opposed to by the overall DI policy?
I mean, it's a good question. From a pure cost perspective, the cost, if they were, I don't want to say they're only concerned about their life insurance premium, but if that premium was a major concern, meaning, oh my gosh, if something happens, um, which is counterintuitive, as you know, a lot of times we'll see if somebody has, financial hardships, one of the first things they think about foregoing is their life insurance. And that really is the last thing that you should let go is your protection. But I get it, I understand it. If you're trying to trim things, in a budget, you're going to trim maybe the intangible things versus I need to go to the grocery store, I need to pay my rent, I need to pay the light bill, what have you. But my point is, the cost of just purchasing the rider on the life insurance policy to pay the premium, is relatively fractional. You're talking a few extra dollars in premium, versus a disability income policy, which again are very affordable. And you and I know the statistics. Actuarially, someone is, I think, 75% more likely to, incur some sort of disability in their working lifetime that prevents them from working than dying, prematurely. With that said, you and I know we see a much greater instance of life insurance purchases versus disability purchases. I guess the thought being, if I'm unable to work, maybe I'll be eligible for other benefits or Social Security, disability, what have you. But I mean, in a perfect financial plan, if I were building one for somebody, there would be a life insurance component with the disability rider, and then there would be a standalone disability income to protect, the cash flow.
I get that point. That is an interesting point as far as if push comes to shove, what do people buy? And a lot of people do buy life insurance
Mhm.
instead of the disability insurance. And one reason I think is because they understand you're going to die. That is the one certain claim you're going to have on all your insurance policies.
Mhm.
You might not get too sick or hurt to leave work. You
Sure.
might get sick, you might get hurt, but they may not translate into something long term, which
Mhm.
would jeopardize your ability to earn a living. So I think that's part of the thinking of some people.
Yeah, I guess the thought process is, it's easy to visualize, a premature death is catastrophic. I mean, what's more catastrophic than, leaving too soon, versus disability. We always talk about insurance being intangible. Disability is maybe even more intangible because you're thinking, well, gosh, I'll be able to figure out something. Maybe I can't do that, but I can do this, that, or the other things. Or like I said, maybe people think, there's other benefits that'll be available to them, through their health insurance, which isn't true. Social Security, sometimes you can't count on it. I would encourage everybody to go to the Social Security website, pull your Social Security statement, and on your statement, it'll tell you, what your disability benefits would be. And I'll say a lot of people will be surprised to see how little it is, if any. So yeah, something to think about. Something to think about, definitely.
I get that. And I'll tell you a hidden benefit of the disability premium waiver rider on life insurance that not everybody thinks of, and I think I might have told you the story once. When I first started with Equitable, the whole agency was abuzz with the following news. There was a guy who had a term insurance policy, a substantial term insurance policy, multi-millions, a young guy, and he got into a catastrophic car accident and became quadriplegic. And and for the foreseeable future that anybody could see, this person was not going to be able to work again. He was like an engineer or something like that. And the term insurance policy he had both a disability premium waiver rider and a conversion rider. So what the agent did was the agent converted that term policy into a multi-million-dollar whole life policy, and the carrier picked up the tab on that new, much larger premium.
Wow.
So both riders were executed, and obviously it was a very hard thing for this family, for him to deal with, the client, and for the family to deal with. But they went from having a term policy to a big, and he got issued at preferred rates. So it was, the conversion class was great. So he went from that situation to having a very hefty cash value accumulation policy free of charge.
Yeah, we see that a lot. Something, people think as innocuous as a rider, just how powerful it can be. But in the same breath, we hope you never use it.
I
We
get
hope you
that.
never use it, but it's so powerful for the relative cost. And it just seems you and I were talking the other day. It seems the trend is fewer and fewer clients, see the value in having that rider. They're like, oh, I don't want to pay the $3 extra or $5 extra a month, whatever it is. And we serve our clients. It's whatever our clients want to do, but it can be powerful.
I like it.
Yeah.
And that brings up our next question in terms of qualifying for benefits. Do you see any differences in how you qualify for the benefit of having the company pay the premium on your life insurance with the disability rider versus qualifying for benefits on a standalone income protection plan?
Obviously similarities, and shockingly not, every company does things a little bit different. We always say insurance companies are all the same. They just do things differently. That's our inside joke. Yeah, so there's usually a component of time, a waiting period, meaning you have to have, that disability, that sickness, that illness, or whatever it is that's preventing you to work for a number of days. Usually it's anywhere from 60 to 90 days. Then you're allowed to file the claim with the insurance company. The majority of companies use the concept of regular occupation, which means I can't do what I do. I can't be a financial advisor, but I'm also I do consulting, or I own a flower shop, and I can sit there and sell flowers to people, what have you. And then some will give like a 2-year window on the regular occupation and say, well, if you're able to earn money doing other things, then we're not going to pay your premium anymore. But most people, in our experience, or what I've seen, is if they're disabled, it's permanent, and more times than not, they're unable, to work in any capacity. So.
Okay, so if somebody has the type of job where, like a teacher or like a surgeon,
Mhm.
a surgeon who is afraid about getting a hand or arm injury and couldn't do any surgery, but could teach at a university at night, or or
Yeah,
medical college, then the definition of disability becomes real important there.
sure.
If it's any occupation, if it's own occupation, then he can get the disability benefits because he can't do the surgery, but he can still get the money he's earning as a teacher.
Sure. Yeah.
Okay, okay. And you're mentioning that there's some variation among carriers with the rider, Some carriers may make that distinction between the own occupation and any occupation, but other carriers wouldn't.
Yeah, yeah, and before I forget to mention, if we have anybody, any clients or uh, prospective clients or anybody who happens to see this video, if you have an instance and you're not sure if you'll qualify, or maybe you're going to file a claim, but you need an advocate to kind of help you through the process and stand up to the big bad insurance company, that's obviously something we could assist with.
Right.
Most insurance companies, believe it or not, are very forthright and genuine and will do the right thing. But sometimes you gotta be a little bit of a bully.
You got to take a stand. I get
Yeah.
that. One last question. Let's suppose somebody's on Social Security disability benefits.
Mhm.
How will life insurance underwriters look at that? Will they still issue a policy?
Sometimes it's one of those independent. It depends, or in the underwriting manuals they'll say individual consideration, meaning they want to know what the circumstances are. If it's like your typical low back issue, or maybe like some sort of orthopedic type injury, that's probably a little bit easier to qualify versus maybe it's like a mental nervous issue where someone had some kind of a breakdown or issue that's psychological, where the underwriter might be more concerned about, again, just actuarially premature death due to various types of things. So it depends. But if someone's on Social Security disability, I wouldn't stop from inquiring with us, hey, can I qualify? Because we have a fair amount of success finding the right company. Some are better than others. Some are more protective than others.
I'll finish up with a story directly to that point about Social Security disability and the concern about mental and nervous conditions that qualify for benefits. Early in my career, I had the good fortune of landing a really big case with a computer business, and there was a funding of their buy-sell agreement between the two partners. There was a 401k plan. There was a big medical plan, and it was two guys from Wall Street that decided to go into the computer business. Pretty young. Not that they were. Let's see, in that time, 40s going on 50. Healthy guys putting in full days. So there was all kinds of applications and paperwork that had to be completed for all these products. So we're sitting down and we're kind of like having a whole team of people filling out this paperwork. And so we go to one of the owners and we say, checking off no, no, no for have you ever, because very healthy guy. And one of the guys that was working with me said, there's a question here about, are you collecting Social Security disability benefits? You're not collecting that, are you? And the guy goes, oh, yeah, I am. I have been for a long time. And we're like, what are you talking about? How could you be collecting disability benefits? He goes, well, I served in Vietnam. I was in one of those mop-up squads where we just went in and annihilated villages because it's part of the strategy. And he goes, and when I got discharged, the Army said, we must have really messed up your head. We're going to give you lifelong benefits. And he goes, they didn't mess up my head. I thought what I did was really hard and tough. He goes, but here I am. I had a great career in Wall Street. Now I'm in the computer business, and they're just throwing money at me. So we had to explain to the underwriter,
Right.
well, this is why the guy's getting it, but he doesn't have any kind of psychiatric history, and there's no records and no drugs, no suicide ideation. We had to give a cover letter to explain why this guy was getting substantial benefits from the government for his service in the Army.
Yeah.
It was wild. So there you go.
Good.
All right. Anything else we need to tell our audience, Darren?
I think that's good. It's just, if anybody has questions individually about their circumstances, we always encourage them, to reach out and we'll have a conversation. Or, if you have existing policies and you're not sure how they work, or if it's the right one, or, the insurance industry is always launching new, bigger, better, more efficient products. Does it make sense to replace it with something new?
Right.
And those are all things that we can look at.
Good points. Thank you, Darren. Thank you, everybody, for coming. Happy holidays, Happy New Year. And we will see you in January for our seminar. Have a good rest of your day.